It's time now for Mortgage Matters with your host, Bill Sandvig. Bill Sandvig serves as market leader running the South Carolina coast for Movement Mortgage. Movement finished 2014 ranked as the #1 mortgage company in purchase mortgages for the Charleston Tri-County area. And they're still growing. And now your host of Mortgage Matters, Bill Sandvig.
Hello, Charleston. This is Bill Sandvig with Mortgage Matters. We're talking about mortgages, finance, real estate. If you have any questions about any of those things, you can always give me a call. Call into the studio. We're here on WTMA 1250, The Big Talker. You can call into the studio at 843-556-1250. Or you can always call me anytime, day or night, on my cell phone at 843-300-7870. And I'm always happy to talk about mortgages, talk about what you got going on in your real estate life, and what you might have coming up and what you're trying to plan for you and your family for that next home purchase. Or maybe it's a refinance to put a little bit of cash into your pocket and do some repairs to the house. I am always here, always happy to talk. So I've been on the air for a little while now, and you guys have heard the name Movement Mortgage around town, hopefully by now. And maybe you haven't. Maybe you're wondering, who is Movement Mortgage? So today on the show, I'm going to talk a little bit about my company, Movement Mortgage, who we are, where we came from, where we started, where we're headed, what our goals are, what makes us great, what I believe is the best mortgage company in the country. I also have in the studio with me one of my team members, Stephen Perry. Stephen, thank you so much for coming on the show.
Thanks for having me, Bill.
It's great to have you here. Stephen has a lot of experience. How many years you been in the business, Steve?
About 13 now.
So 13 years in the industry. He's been with a couple of different companies, been with a large bank. Now he is with us, the #1 non-depository mortgage company in the Tri-County area in 2014. Finished 5th in overall market share. Only banks were ahead of us. I don't even know if you knew that, Stephen, but only banks were ahead of us last year, and we are on pace in 2015, more than triple what our production was in 2014. Amazing growth. And I want to share that with the audience today. I want to share with why Movement has had that success, because the success we're having here in the Lowcountry, it is not unprecedented. We are now #1 in market share in Charlotte of anybody. We are #1 in Richmond, Virginia. We are in the top 3 in Raleigh. We're in the top 3 in Virginia Beach. Places where we've been for only 5-6 years, and we are one of the top lenders in those areas, and it's happened so fast. And there's a reason for that, and I'm going to dive into that a little bit more later in the show. We're going to talk about why that's happened. So I want to talk a little bit about Movement Mortgage and who we are. Movement Mortgage was founded in 2008, a small little startup, 10 people sitting in a garage. And if you think about 2008, what happened to the mortgage industry in 2008? I'm not a hypothetical question, Stephen. What happened in 2008 to the mortgage industry?
There's a little bit of a market crash.
So a little bit of a market crash. I'm sure you guys out there have done quite a bit of reading, or probably felt the implications of that back in 2008. The market, the end of 2008, Lehman Brothers falls, and the market turns, and the entire country turned their eyes on the mortgage industry. Housing prices had been skyrocketing across the country for the last 5 years. Values were ridiculously overinflated, and the bubble burst. You've heard that term a million times now, and housing prices started to fall, and they started to fall fast. The stock market went with it. And I don't know how many of you out there are familiar with what caused it. I'm not going to get into too much detail about that, but basically what happened was, the lending, for lack of getting too deep, the lending guidelines had gotten a little too loose. There was, and you remember this, that these products started hitting the street, no income, no asset loans, no document loans. Tell me a little bit about your experience about when you were taking loans from customers back in 2006, 2007, 2005, and what that was like.
Well, I would say, first of all, that the real estate industry in those years leading up to 2008 was extremely busy. And for the most part, lenders, to accommodate the workload, invented paperless products because it saved time in the loan processing and allowed them to get more people approved. Those paperless products led to embellished loan applications, and we didn't have the appraisal guidelines governing us that we do now. And so appraisals often found more value in the house just based on a time adjustment that existed with the comparable sales being adjusted upwards for, say, a few months, because appraisers understood that's how fast the market was moving. So we had paperless products, we had inflated appraisals, and the result, as we know now, was very bad.
Right. So I want to expand on that a little bit. So if you can imagine, and many of you out there might have experienced this back in 2005 because you bought a house. So many people did. You bought a second home. You bought an investment property. And you go into that lender's office. The banks are willing to now lend without really looking deeper than your credit report because, hey, property values are going up. And they're going up at crazy levels. So what's the worst thing that can happen? The person doesn't pay their loan and the bank's got ridiculous amount of equity in their house, right? That's how it's always going to be. Well, that was the thought. That was what the decision was going on. And so imagine, and this might be you. You go into that office and you sit down at that loan officer's desk, and this loan officer wants to get an extra deal in, right? And you sit down and he says, I've got this great product. If your credit score is above 680, then we don't have to verify your income. We don't have to verify any assets. So tell me, what you'd like to buy? Well, a customer says, I want to buy a second home, and I'm looking to buy a $400,000 house. And, well, great. How much are you putting down? Well, I'm not going to put anything down. Okay, that's no problem. We got one of those too. Okay, well, awesome. So how much do you make? And the customer says, well, I make X number of dollars. Oh, well, if you make X number of dollars, you unfortunately can't buy a $400,000 house. But if you just happen to make Y, you could. I'm not going to verify this. I'm not going to check it. Now, there were people out there doing that. It was happening. And so people are overextending themselves, overbuying, overqualifying or underqualifying for too much house and buying second homes. Well, when that second home value that was financed at 100% didn't go up, it went down. What was the first thing that went? It was a second home. It was the investment property because it couldn't make the payments anymore. We're not even touching on the option ARM and the ARM products that came out in that time. We're not even going to go there. But I just wanted to lay a little bit of the groundwork about what was happening in the industry back then in 2008 when Movement Mortgage was founded. So Movement Mortgage was founded in 2008 with this team, and the two founders, Casey Crawford, Toby Harris, they had a vision. They had two things really. They had vision and they had a belief. The vision was that because of the crash in 2008, they knew that mortgage lending guidelines were about to change. They knew that federal regulation were going to come down on the industry and change things in a dramatic way. They also knew that when that happened, the big banks and the mortgage companies were going to, one, start to fall away, which we saw by the droves. Mortgage company after mortgage company closing up shop and getting out of the business. And the big banks started to hide behind those regulations. The big banks, we've heard that term, too big to fall or too big to fail, right? The big banks, they're not going to be able to stop lending. They have to. The economy depends on it. But federal regulation is going to come in and make sure that what happened in 2005, 6, and 7 doesn't happen again. And so the banks change. They start to hide behind the regulations that are coming in, and they hide behind those regulations and making excuses for why customer service started to fall. Customer service, our founders, Movement Mortgage, identified there was about to be a massive gap in customer service in the mortgage industry. A gap to the realtors who are serving the buyers, a gap to the builder partners who are serving the buyers, and a gap to the consumer level itself. And they felt that gap led to opportunity. So they said, we are not going to allow for the regulations from the federal, the government, Congress, anything that comes out, Dodd-Frank Act, we can get into a million things. We're not going to allow for those regulations to control our company. So what they said is, when we do this, when we start this company, we are going to make sure that service is number one. Service above all else. Nothing else matters. Service to the customer, service to the realtor. And that has been the mantra from day one until now. The second thing that they identified was that the United States was always going to place a value on home ownership. They believed that, yes, things are going to get tighter, regulations are going to come down, but ultimately the government is not going to let go of the American dream of home ownership. And the government and the United States is going to recognize that home ownership is the key to economic recovery, and it's the key to a healthy, stable economy. That was the case. Programs like HARP Refinance, Home Affordability Act, these things started coming out, which allowed for people to get into homes that otherwise couldn't get into homes. It allowed for people to refinance mortgages that were high interest or adjusting arms and get into products that had a lower payment, pumping money back into the economy. So the owners of the company identified those two things, the gap of service, but a value of home ownership across the country, and they saw the opportunity and they created a mortgage company. What's amazing to me is back in 2008 when the company was founded, these 10 people sat in a room and they said, if we're going to do this, there's only going to be one way we do it. And it's that we do it better than everybody else. If we're not doing it the best, then we're going to stop doing it. And that kind of philosophy, if you think about it, it's almost kind of laughable to think that, a room full of people could say, we're going to be the best mortgage company that there is in the country at that time. They also set a goal back there in 2008, and they said, inside of 10 years, we want to be doing 1 out of every 10 purchase mortgages in the country. 1 out of every 10 purchase mortgages in the country inside of 10 years. The company doesn't even hardly exist yet. And they set that goal. Now, less than 7 years later, we are one of the top 20 purchase mortgage companies in the country. And right now, we're doing 1 out of every 75 purchase mortgages in the country in 7 years. We are ahead of the pace that they set to hit that goal. And if we keep our continued growth, we're going to hit it. In the next segment, I'm going to dive into exactly what we do from a processing and fundamental standpoint and from our core standpoint that's allowed for us to be the fastest growing mortgage company in the country, which has allowed for us to be one of the top 5 in market share here in the Low Country. So when we come back, we'll start diving into those other topics. This is Bill Sandvig with Mortgage Matters.
There's more Mortgage Matters with Bill Sandvig coming up next on The Big Talker, 1250 WTMA. You're listening to Mortgage Matters on 1250 WTMA. Once again, here's Movement Mortgage's Bill Sandvig.
We're back with Mortgage Matters. I'm Bill Sandvig, your host. If you have any questions for me at all, you can always reach out to me directly at my cell phone, 843-300-7870. I'm happy to talk to you about mortgages, your particular situation, what you got going on with your mortgage, what you got going on with your house, with your family, and your finances. And one of the things I always talk about on this show is if you have anything going on financial related, it doesn't have to be about mortgages. Give me a call, because if I can't help you, I know someone excellent at what they do who can. And I know someone excellent at what they do locally who can help you and be there and give you a proper service level that you deserve. And I got a couple of local partners that I just wanted to mention right now. Nick Pavia of Commonwealth Financial Group, an excellent financial advisor. You can find him on his website at www.commonwealthfg.com. Also, Andrew Muller of Mappus Insurance. Andrew is the renowned flood expert here. I've had him on the show a bunch of times. Everything I've learned about flood insurance and about homeowners insurance, I've learned from Andrew. And Andrew Muller can be found at his website, www.mappusinsurance.com. Another partner, Jimmy Foti of Foti Law. Jimmy is an incredible real estate attorney. If you have questions, it doesn't have to just be about a real estate closing. If you've got title questions or you've got any kind of issue that might be involving real estate or beyond, you can call Jimmy. He's always available. And you can find him at www.fotilaw.com. I've got so many other partners. If you have a need, I promise you I can help you fill it. Again, my number, 843-300-7870. You can find me on my website at www.lowcountrylending.com. Pretty much 24/7 there. And my cell phone, you can ask my wife. It pretty much rings 24/7 too. So you might as well just call. You're on the mid shift, call me. If I can't answer, I won't. All right. So the first segment, we were talking about why movement, a little bit of the backstory about who movement is. We talked a little bit about the mortgage crisis, some of the things that led to that, about how loose lending guidelines got and how lax they were, and how that led to some real problems for the economy and for the country. Well, there's been a swing. So as loose as things were then, they're tighter now. And if you've done a mortgage in the last 5 years, you have felt that difference. You have felt the changes in the guidelines and the changes in the regulations that lead to what can many times feel like a very challenging and cumbersome and frustrating process of getting a mortgage. And we want to talk a little bit about what that is, why that is, and what movement has done to make that different, why it's different with us, why it feels less painful with us. You're out there right now and you're listening and you are under contract for a house, or you are about to do a refinance, or you're thinking about buying a house, or maybe you're 2 weeks away from closing and your lender hasn't called you and told you you're approved yet, and you're frustrated. If that's the case, you need to call me, because my company, we move fast, we move quick. It's one of our strongest suits. We close loans in as little as 10 or 11 days all the time. Stephen, how fast was your very first closing you ever had with the company?
First closing happened in 8 business days, Bill.
8 business days. And it was a loan that, I remember the story, a loan that was denied from another bank after being in process with them for almost 2 months.
Denied by 2 other banks, actually. It was a new construction home. He'd been under contract for quite some time, moving his family, everything's in motion, and all of a sudden, a couple days before closing, he gets a call from the lender he was in process with saying that he no longer qualifies for the loan. Kind of a situation that you've probably heard horror stories similar to everywhere, but one that in this case we were able to step in and save him from, and get him closed in just 8 business days and get the family moved in. And so that was my first closing with Movement Mortgage after having worked 12 years with the big banks, and I can tell you that never would have happened at my former companies.
Yeah, it's a powerful thing to be moved as fast as we do, and we're going to touch a little bit about that. So one of the things that makes Movement so great is our speed. Without question, our speed. And if you're out there shopping for a house or thinking about shopping for a house, you're probably talking to a real estate agent. If you're not talking to a real estate agent, call me, 843-300-7870. I will put you in touch with the best, depending on what area you're looking in. I will find you the best real estate in the Low Country, because I'm working with them. So if you're thinking about buying a house, don't have a realtor yet, call me, 843-300-7870. But if you're thinking about buying a house, you also need to call me, because now is the time to start looking into getting your financing in place. Don't wait until you see that house that you want to go buy, because when you wait, you're lost. Right now, the market is so hot that every house that hits the market, it's got people looking at it, and it is not going to be there for long. So if you're thinking, oh, I'm just going to pull the trigger when that right house comes up, you're thinking backwards. You've got to make the call now, and you got to get your financing in place now. And that really ties into what I want to talk about a little bit in this segment, which is the difference between being pre-approved or being pre-qualified and being approved through underwriting. So a typical question when you do call that realtor for the first time is they're going to ask you, have you looked into your financing yet? Have you been pre-qualified? Well, what that means is if you're out there, you've probably been through the process, but that means you call a lender and they pull your credit report and they do a review of your income and assets. Maybe. Sometimes lenders do, sometimes they don't. Sometimes they just go off of your word of mouth. Sometimes they're too busy to do a full review, and so they just give you what you need. Well, the less work that goes into that pre-qualification, the less reliable it is. Because I promise you, the mortgage guidelines are the same for every person out there. If you're doing a conventional loan, you've got to follow the conventional rules and you've got to do conventional documentation. If you're doing a government loan, FHA or VA, you're following the FHA and VA rules, and you're going to collect the FHA and VA documentation. You're not going to get around it. It doesn't matter who you're going with. So the amount of time that goes into the work to get you that pre-qualification letter is really important, because if it's not thorough, if they're not taking a full application and fully vetting you, there are potential things in your application that could cause that loan application to fall through. So what do we do? What do we do at Movement Mortgage to make that different? When you go to another bank and ask for a pre-approval, you're going to have a conversation with your lender. They might collect some income statements. They might collect some asset statements, and you're going to get a letter. That letter is going to say, congratulations, you have been pre-qualified for a purchase mortgage up to $300,000. Then somewhere in that letter, in bold, somewhere in the middle of it, at the bottom of it, it's going to say this: this is not approval for a loan. I don't care what company you go to. Every single company's letters got it on there. This is not approval for a loan. So you got to think to yourself, well, I mean, this means something, but what does it really mean? It really means that all the people that are going into the contract or going into that pending sale are relying solely on the work that loan officer, who most of these people don't even know, have done. That loan officer is not really held properly accountable in most cases for what work goes into that pre-qualification letter. I joke with my realtors all the time. I say, real estate agent, do you know how much time it takes for me to make a pre-qualification letter? And they say, an hour, 2 hours? No, it's 5 seconds. 5 seconds, because all I really need to do is take a form letter, change a name, change an address, change a price amount, and hit print. The work that goes into creating that letter before I do that 5 seconds of work, that's what makes the letter valuable. And if you don't know where that's coming from, and the seller doesn't know where that's coming from, because you're buying the house, you've got the letter, they have no idea. All they see is a pre-qualification letter. This is not approval for a loan. So how do you change that? Well, what we do is when you call us, we're going to collect a full application, just as if you were under contract for a house, just as if you were about to make an offer on a home. We're going to collect everything. We're going to collect W-2s, pay stubs, bank statements, tax returns. The list goes on and on. We're going to have you sign paperwork. We're going to take that file and we're going to send it into underwriting. We have made a decision as a company to devote time, money, and man hours to you getting fully approved, even if you don't have a house. Let me say that one more time. We've dedicated time, money, and man hours to you to get you fully approved through underwriting without even having a house or having a contract. Now, what does this do for you? What does this do for the real estate agent? When you're fully approved, you no longer have a letter that says this is not approval for a loan. You have what's called a commitment letter, a commitment from a lender to do your loan. That means you now look like cash. You're done. You're through underwriting. Underwriters are held to a different standard for the underwriting. They're the ones whose job is on the line if they don't do the underwriting job right. They're the ones that are really tied into the regulations and to the back end, for potential loan buybacks. They're the ones that have the higher level of accountability to approve these loans. And so that's what we're doing, is we're getting you to that step so that you're approved. When you go and make that offer to the seller and they have multiple offers because the market's hot, and 2 of those offers have letters that say pre-approved, this is not approval for a loan, and your letter says approved, and your letter says you can close in 2 weeks because you've done the hard work up front, guess who's going to get the house? It's going to be you. You're going to be approved. Now, the cool thing about this is we can do this process in 1 day. Our underwriters are expected to review your file and make a decision on it in 6 hours. Tell me about the difference for when you would take an application and send it into a processing center to an underwriter at their last big bank, how long that would take?
I think it was 6 to 8 days.
6 to 8 business days, just to get that initial underwriting look. That's faster than I experienced when I was at the big bank. I tried to do one time I tried to send in a client to the they didn't have a contract and send them into the underwriting to get a review. And 4 weeks later, I was emailing the underwriting department asking where the review was because they had not prioritized it. They had decided they had to focus on refinances. They had to focus on the people that were under contract. And the person who didn't have a contract, they weren't important yet.
I'd like to add, too, Bill, that during periods of high volume of business at both of my previous large bank employers, we couldn't even request a loan application to be reviewed by underwriting unless they did have a property.
Oh, so
it is so valuable to be able to get underwritten before you found a house. It's something that's very unique to Movement Mortgage, and it leads to many more successful home buying experiences.
Without question. So I've gone a little long in this segment. I'm going to wrap it up. If you have any questions at all about this, please reach out to me anytime. My name's Bill Sandvig, 843-300-7870. When we come back on Mortgage Matters, we're going to talk a little bit more about that speed and why that's important to you and how that can really delineate you in your home buying experience. Once again, this is Bill Sandvig, and this is Mortgage Matters.
Bill Sandvig has more Mortgage Matters straight ahead on 1250 WTMA, the Big Talker. 1250 WTMA. This is Mortgage Matters on 1250 WTMA. From Movement Mortgage, here's Bill Sandvig.
Thanks for tuning in. We're talking about all things mortgage related, real estate related, finance related. If you have any questions about any of those things, or any questions at all, I mean, I could talk about what the meaning of life is, or about your kids. I'd love to talk about my kids. Give me a call, 843-300-7870, and I'll be happy to talk about all those things with you and more. You can also look me up anytime, even submit an application if you just kind of want to see where you're at, know what your buying power looks like, do a buying power evaluation for you. Go to my website, www.lowcountrylending.com. And I also want to encourage you, reach out to me. If I can't help you, there's a local partner who can. I know them. I know the experts. I know them here in the Low Country. I've been in the Low Country for a long time doing this. So give me a call and I'll point you in the right direction. Whatever you need, I've got someone who does a great job doing it. And so in the last segment, we talked about the difference between a pre-approval and a pre-qualification and the significance between those two things. One, the pre-approval or the pre-qualification is where your file has not been turned into a processing center, has not been turned into an underwriter. Your loan officer has done some level of review, a cursory check, and issued a letter that you're going to use and go and show someone that you can buy a house. And a question you might want to ask yourself if you're out there, if you're under contract for a house right now, or if you're shopping for a house right now and you have a pre-approval letter in your hand, have you turned in all of your stuff that it takes to get fully approved for a loan into that loan officer? And probably for a majority of you, it's not. And I'm going to bog you down a little bit right now. Stephen and I are going to bog you down, and we're just going to brainstorm a list of what it takes to do a regular old conventional loan and get that thing turned into underwriting and have a decision made. So I'll start us off. How about 2012, 2013, and now 2014 tax returns?
Gotta have them, Bill. And you got to sign the second page of your tax returns to let your lender know that you're saying this is your official tax return. You're recognizing this as your true financial statement.
And that's not just page 1 and 2 of your 1040. That's all pages, all schedules. How about business tax returns? You self-employed? You got a business? We need those years as well. 2012, 2013, 2014 business tax returns. All pages, all schedules.
How about W-2s? Even for self-employed folks that might pay themselves a regular wage. Got to have the W-2s in the file as well.
Schedule K-1s, self-employed, 1099s, all those years, bank statements. at least 60 days of bank statements for any asset account you have. If you have a retirement account, we need that too. Quarterly statements of all retirement accounts. We need you to sign IRS forms so we can request your transcripts from the IRS. What else?
That's right, Bill. Not only are we asking you to sign your tax returns to say that they're true, but we're then going and verifying their truth with the IRS. And that process takes a few days as well. But, then asset verification, when we're talking about collecting bank statements, that's probably our most tedious action, and the borrowers'
biggest frustration,
what they spend the most work on. And that the reason for that is because of deposit verification. You see, we have to be sure about the source of every dollar that's spent on your down payment. It can't come from unsecured loan funds. How do underwriters ensure that these are your own funds? Well, they look at the deposits going into your bank account, and if you've got payroll deposits, that's great. Those aren't questioned any further. But if you've got $1,000 deposited at the ATM because your sister paid you back a loan, well, then you got to explain that. You got to get an image of the check. You got to get a letter of explanation saying where that came from. So I would say asset documentation is probably our most tedious task on a loan application.
Yeah, I would agree with that. I'd agree for sure. So there's a quick laundry list of just some of the things you might need. And my guess is if you're out there with a pre-approval letter thinking about buying a house, you haven't turned that stuff in. You might have turned in some of it, but you haven't turned in all of it. And that means that you could be going under contract thinking you're ready to buy a house, and you're not. So that ties back to what we do at Movement Mortgage that's different. We are going to collect all of those items up front before you have a house, before you've written a contract, and we're going to take the time and we're going to turn it into underwriting. Now the cool thing happens. We collect all those things. You're going to have to do it anyways. You can't get away from it. Just because you talked to your bank and they said, all I need right now is a pay stub and I'll get you this pre-approval letter, doesn't mean that that's all they need. There's going to be that laundry list coming your way. It's going to hit you between the eyes. It's coming. It's not changing. It doesn't matter who you go to. It is coming, I promise you. So we're going to encourage you, and we're going to ask of you to do it now. If you're thinking about buying a house in the next 4 or 5 months, do it now. Get fully approved. Let's get all the skeletons uncovered. Let's be sure about this. Now, why would you want to do this? Why does this help you as the consumer? Imagine if you're selling your house and the market's hot. You're excited. You're going to get top dollar for it. You know you got multiple offers coming in, and here they come. Multiple offers on your $200,000 house, and one of those offers is a cash offer for $198,000. The other one is a offer for $200,000, but it's a pre-qualification letter, and they need 50 days to close. The cash offer needs 40 days to close. Are you going to think about that cash offer? Are you going to think about taking $2,000 less for your house to have the sure thing? Of course you are. Your real estate agent's going to encourage it because your real estate agent knows that 50-day closing with 3% down is a big, huge question mark. And they might end up putting your house in escrow for 50 days. The flip side is true. If you walk in as a buyer, instead of having a pre-qualification letter, and you have an approval letter, a letter that says you have been through underwriting, you are approved, you have a commitment to lend, think about how your real estate agent can use that to your advantage. When you go and look at that house on Saturday, that first house at the top of your list with your real estate agent, and you and your family love this house, and you take a look at it, this is it. This is the one. We are going to buy this house. Well, I promise you in this market right now, there are 3 other families that are thinking the exact same thing on that house. And it's only been on the market for 2 days, and it's going to get an offer today, and you need to move fast. So you get your offer in. What would you rather have? Would you rather have a pre-qualification letter that says this is not approval for a loan, or would you rather have a commitment letter and show that seller that you can move and you can move fast? When we do that up front, and we do it so fast, I'm telling you, you get our documents into us, our underwriters are expected to review the file in 6 business hours. It doesn't happen every time. Our average right now across the company is actually pushing 7 hours. 7 business hours right now is the company average for the initial review. And we treat every customer the same. Contract, no contract, house, no house, refinance, purchase, you're all the same. You get in here, within one day on average, you have a commitment. That means you could call me on a Tuesday, and by Thursday, I've got a commitment letter in your hand, so that when you go on Saturday, your real estate agent can take that commitment letter, that approval from underwriting, and they can leverage that to your benefit. They can leverage it to get you a better deal on your house, and to, more importantly, get you the house that you want, get you the house that your family wants. I can't stress how powerful that is. It's probably the number one reason, without question, why Movement Mortgage has been the fastest growing mortgage company in the country for the last 5 years. I mean, the power of it, it's why we've gone from being nothing to being fifth in market share movement here in the low country. It is so powerful. If you've got questions about that, about anything mortgage related or more, again, I'm Bill Sandvig. I'm here hosting Mortgage Matters. You can reach me 843-300-7870. We got one more segment coming up. We're going to close out the show. We're going to talk a little bit more about speed and a little bit more about movement. I'm Bill Sandvig. This is Mortgage Matters.
Mortgage Matters continues next on Charleston's Big Talker, WTMA. Now, let's get back to Mortgage Matters on the Big Talker. From Movement Mortgage, here's Bill Sandvig.
I'm Bill Sandvig, and this is Mortgage Matters. If you have any questions at all, mortgage related or anything related at all, give me a call. My number is 843-300-7870. You can also find me on my website at lowcountrylending.com. That's lowcountrylending.com. You can read about me. You can see my picture. I'm sure you're all interested in what I look like. And you can put in an application, a buying power evaluation, so I can let you know what your buying power looks like. You might be surprised. You might be sitting there thinking, you know what, I can't really afford what I think I want to live in. Well, that's the wrong way to be thinking right now, because rents are higher than mortgages. I promise you that. Your quality of life and your living arrangements will be better in a purchase than they would be in rent right now. So you should take the time to find out. 843-300-7870 and www.lowcountrylending.com. We spent the first 3 segments talking about Movement Mortgage and who Movement Mortgage is. And we talked about pre-qualification versus being fully approved through underwriting. We talked about how fast and how speedy our underwriting process is. Our expectation is for our underwriters to be fully reviewed and done with your files and done with your loan application and issue a decision on your loan, issue that approval in 6 business hours. That's the expectation. There's another expectation we have. From the time that approval is issued, it doesn't stop. Once you have the contract and you go into processing, it's expected that our processors will have your loan done, clear to close, in 7 business days. So that means all your stuff as a customer, you're done with the process in 7 business days. Now, there's some things we can't control, appraisals, title work. There's a couple other things out there that we can't really fully control. Now we can push and we can press, but our job, the lender's job, is done through processing in 7 business days. Now, that's pretty amazing. Last year, we finished with 69% of our loans across the nation that were done and met that 7-day processing goal. Unheard of in the industry, revolutionary industry. You might ask, why did we pick 7 days? The reason we picked 7 days is because the government won't let us do it any faster. You can't close a loan faster than 7 business days. You can't close until that 8th day. So we said, why don't we just make that the goal? Why don't we make that the standard? They won't let us do it any faster. That's what we're going to do. And it's been a powerful message, changing the industry. And so I want to break away from speed a little bit, and I want to transition into what else makes us great. And Movement Mortgage, what makes us great is our culture. The people in our company are coming from a position of service, an attitude of support. They all believe and understand what the goal is, and that's to deliver excellent, incredible customer service and an excellent experience to our real estate partners and to our buyers and to our customers out there. And the cool thing is that everybody gets it. In the places where I worked before, in that, I'll keep using that term again, the big bank, they were downtrodden. 5 o'clock hit, I'll see you later. And everything shut down. And The processing centers were worn down and worn out. And when that closing date came and rolled around, there's actually, get this, you're listening out there, this might shock you. There are lenders out there that if you don't have everything done and into the final review stages 4 days prior to closing, you're going to get a phone call and they're going to move your closing date. They just won't budge. They're too cumbersome to be nimble enough to react to the last minute things that can come up. You just can't control everything. We can try, but even when we do the process our way and we look at everything up front, there's going to be times where where these landmines or these last minute things come up that we can't control. You know what I'm talking about.
Oh yeah, Bill. I mean, I was working on a loan just this week. I think on this particular loan, we did get all of our items done within the initial 7 business days, but things can come up that are out of our control. In this particular case, the insurance agent called the customer the day before closing and said, "You know what? I didn't realize you have a dangerous dog breed, and therefore I can't write your insurance under this current insurance company, and we need to change insurance companies." Well, when you get a change like that the day before closing, a lot of times it will derail the transaction. And I'm so thankful to say that at Movement Mortgage, the culture and the sense of urgency are there in order to facilitate a quick turnaround on something like that. And these folks are going to be able to close on time, which is it's quite special, really, in our business when you consider that closing dates are constantly delayed, constantly missed by lenders. There's almost no sense of urgency and no understanding for the family that's got a moving truck in the driveway, and they've already sold their previous residence, and where are we going to live? And it's very refreshing here at Movement to see the sense of urgency all the way throughout the entire loan process to make sure that doesn't happen.
It's hard for the consumer to really understand how significant something what seems small like that can have on the mortgage process. You have to switch insurance carriers last minute. Well, the premium is going to change. That's going to change the closing numbers. That means the closing package has to change. That means it has to go back to an underwriter to make sure that the change in premium is allowable to their debt to income ratios. That means that a processor has to re-upload a brand new insurance binder. The insurance binder has to be reviewed by a different underwriter. It goes on and on. There is a lot that goes on because of one change the day before closing, and a consumer at their level is going to think all we did was just replace one policy with the next. There is so much more that goes into it, and in other companies, they're gonna hit a roadblock like that, and they're gonna stop trying.
They're going to use it as an excuse to buy extra time and close later.
I'm so sorry that this happened, but because of this happening, because your insurance changed, we need, and I told you this from the start, we need 72 hours to be able to finish the loan and get it into closing. That's not what happened here for Stephen. When this happened yesterday, our team, our underwriters, our processing centers, our managers, we send out an email. It's literally has a 911 address attached to it. Everybody gets it. All the people that matter get it, and everybody rallies together. It's a difference in the way that the mortgage industry it does business, and I'm so proud to be a part of it. I'm so proud to work for a company like Movement Mortgage where they care about the consumer, they care about the result. Thank you so much for listening today. My name is Bill Sandvig. I'm here on Mortgage Matters. We're talking about finance. We're talking about real estate. We're talking about mortgages. And if you have any questions at all, you can always reach out to me, 843-300-7870. Stephen, thank you so much for coming on the show today.
Thanks for having me, Bill.
I really enjoyed talking with you, and I really enjoyed getting your insight. It's great to have another team member on. And again, you want to find me, put in an application, answer some questions, go online, www.lowcountrylending.com. That's www.lowcountrylending.com. We are on WTMA 1250, The Big Talker. I'm Bill Sandvig, and you've been listening to Mortgage Matters.
You've been listening to Mortgage Matters with Bill Sandvig from Movement Mortgage. Call Bill for your mortgage needs at 843-300-7870. That's 843-300-7870. Listen again next week at this time for another edition of Mortgage Matters with Bill Sandvig on 1250 WTMA.